Hello, hello, hello. So today is February 2nd. So we're going to go over how our Roth IRA portfolio on Robinhood did in January of 2026. So currently you can see that we're sitting at $24,879. Okay. A little bit rough start to the morning. We are on a Monday, 4 hours. Week down 0.3%. Month, we're trading about flat. So that's interesting to see. 3 months, pretty close to flat. Year to date, 0.96, 1%. And then we got, 18% for last year and then 32% all time. So if we look at the year to date, I mean, that's pretty on par with like a 12% return. So it's pretty standard. A lot slower than obviously what's been going on, and we'll get into that. So we'll look at a couple things here. Contribution so far we're at 3,300 for 2025, and yeah, we are prorating our contributions to 2025 up until I can, which is in May. So hopefully get this number closer to something like 4,000, 4,500. Kind of shoot for that point, and then the next year we're going to shoot to max it out. So that's doing pretty good. We got our weekly buys going on, but we got to manually do it now, and then we got some trading history here. So let's look at our positions, and we can look at the equity. So we got QQQM, 59.37 shares. It's $15,124. And then we got VU, 15.38 shares. That's $9,756. So it's about a 60 to 40% split on the portfolio, mainly tech heavy, but obviously we're trying to keep some, trying to lower our beta a little bit so the swings aren't as bad. Kind of a lot to talk about in this video. It's been a very interesting month. I would say the overall sentiment that we're going to get into is AI sentiment is lowering. And a couple of stories that kind of support this is ChatGPT is talking about putting ads on their free tier. Okay, they said that's like a worst case situation. Well, seems like we're in the worst case. Cloud API, I believe they're doing charge as you go. I think they had a previously different instruction. I mean, although it was in their fine print, they weren't exercising it. Now they are. And then Cursor, which is an AI assistant for coding, which was previously just on the monthly plan, is now a charge as you go after you hit your monthly maximum. So a lot of people are getting upset about that. It becomes quite expensive, $8 for a single prompt at times. So that's very interesting. Some other stuff I wanted to talk about, which we typically really don't talk about, is gold and silver. Let's look at the last week because this one happened. Okay, gold dropped about, I mean, we can see we were up at 10% here, and now we're down 7%. So I think in one day it was like they dropped like 10%, which is absolutely crazy. And then the even crazier one is silver. So let's look at silver trust here in the week. In a single day, silver dropped 30% in value. That was crazy. So silver was trading at an all-time high. I think they hit about maybe 110. And that was like a huge deal. Everyone was trying to sell their silver because like this is a great price. I mean, look at that. So you can see that one day alone, basically, wow, that's crazy because yeah, it wiped away that whole month's progress because it was just flying up. Quite frankly, I mean, look at this. That's it's a pretty parabolic chart, especially when you look at all time where it's normally trading pretty flat. This kind of gets in an overall bullishness, bearishness on the stock market. Because I mean, if we look in Bitcoin, this is kind of a fear indicator too. Bitcoin has been trading down quite a bit. They're at 77K. They peaked at 120, so we're getting close to that 50% drop. So if you're pretty bullish on crypto, that's good for you. But all this shows like, hey, people are slowing down on buying, and that asset inflation maybe that was going on before isn't quite running it up anymore. There's only so much money at a time that people can put in, especially when people are squeezed on income, for example. Maybe they're not investing as much. People are selling their commodities, trying to have a little bit of a cushion. So, very interesting. Let's get into some individual ticker news then. We got NVDA, and I did want to see how they'd be trading pre-market, and this is pretty accurate. The big article with this is they had, I think, $100 billion pledged over to OpenAI, and they actually brought it back, which is very interesting. So they were looking to like, hey, we will invest in you a little bit. We're gonna be doing business with you, $100 billion, and then they basically more or less said, hey, we're not seeing you operate to where we thought you would. We're going to actually pull back this pledge, which is kind of a fear that a lot of people had because a lot of these AI companies are saying, yeah, we'll spend like 300, $400 billion, but then reality just kind of falls apart. And that's kind of what's going on with Nvidia in this case. So it's a little bit shaky up to the market. And then we got kind of a double whammy on earnings. We saw Meta crush earnings and they jumped 10%. So I was like, okay, that's great, especially if you're worried about, oh, let's see, these are, yeah, oops, leverage ticker. But Microsoft dropped 10%. So it's like, okay, well, what's going on here? So I believe, if I'm not wrong, Microsoft actually had a good earnings report. It wasn't the worst. And Meta had a great earnings report, but the difference is that Microsoft is becoming more, well, I guess less diverse in their customer base. So basically, yeah, sure, a lot of the revenue is increasing for them and all that. But the issue is that one of their main customers is OpenAI. And we talked about that with the NVIDIA story, that OpenAI isn't really performing as good as they need to be. They're trying to introduce ads to the free tier just to make the business model make sense. They're putting a lot of these pledges out there to spend money and all that. But Microsoft is kind of relying on them for a lot of their revenue. So say, OpenAI kind of goes down, well, Microsoft isn't going to necessarily be benefiting too much. If you look at this Microsoft chart here, they've basically lost all gains from May 2025, which is a pretty significant amount of time. I mean, we're in February, so in 3 months, if they sit around this price, that's 1 year of no gains. I mean, if you look at the 1 year, it's only 2%. So kind of the market's darling Microsoft, which is normally very diverse, customers all across the globe, is kind of diversifying a little bit, which is concerning to see. Tesla, they announced that full self-driving will be a monthly subscription. Everyone seems to really hate that because previously you could buy it all at once. I mean, I think the technology's there. You could just make the argument that it would increase car sales, but they've been ramping back. Well, they've been scaling back a little bit on car production too. So that was interesting to see. I mean, down 5% for the week, 7% for the month, even 3 months, year to date. But then 1 year, we're up 5%. 5 years, we're up 55%, which is very interesting to me because that's about if we just look at nominal, that's 11% return a year, which is about market average, which for Tesla, I mean, back in the day, you couldn't even imagine that thing was going parabolic. Kind of reminds you of like NVIDIA stock, right? But they've slowed down quite a bit. So soon enough, I mean, in the 5 year, if we get up to February of 2026, well, okay, we are in February of 2026. So if, if the stock price dropped down a bit, we would be at about flat there. But say we get up to November and it's trading about where it is now, the 5 year will be basically flat, which is very concerning for a stock like Tesla. So market concentration, we're seeing that some stocks are kind of bringing up everything. And then United Healthcare, this was very interesting to me because I've been kind of watching this one a little bit. So let's go even further out. So a lot going on with United Healthcare. This is kind of where the whole Luigi Mangione situation happened. And the stock was actually doing decent. Like it was weathering the news okay. But then they kind of got put in some lawsuits of potential Medicare, Medicaid fraud. And that just tanked the stock, right? We had, forecasting pulled back and all that. But then the stock seemed like it was recovering a little bit. And it was. But then recently we had an earnings report and the stock just kind of dropped again. And so it's like, what's going on? I mean, dropping 20% the past week, right? What happened? So basically, a couple things here. On the Medicare Advantage payments, which Medicare Advantage is like kind of their standard plan, the rates for 2027 are going up only by about 0.09%. And I think goes without saying that this is the main source of revenue, Medicare premiums, right? So if it's only going up by 0.09%, their revenue is going to stay relatively flat. And that's if they remain with the majority of the customers they have. I think it goes without saying their brand image is kind of shot in the foot because of what happened. So if you see, I'm not too familiar with the market, but you see United Healthcare and then competitor B, and they're about the same. You're going to pick competitor B just because of all the negative connotation with United Healthcare and rejecting claims and all that. It's coming back to bite them, quite frankly. So I think they're going to have to pivot and kind of try to provide value back to the customer, work on their brand image if they really want to be able to increase premiums, which isn't good for the general public. But if they want to increase their revenue, they need to be able to kind of revitalize their business. And additionally, this comes in hand with analysts expecting a 4 to 6% increase. So basically, people are saying, okay, it's going to be a pretty modest increase, but they had no increase, and revenue was weaker than forecasted. So that was a perfect storm to just kind of tank United Healthcare stock a little bit. So unfortunate for that, but if you are looking for a fair value play, United Healthcare, I think, would be interesting to look at. I mean, let's see where Morningstar, if we can see it down here. They're saying 427 bucks. You got a lot of margin. That's, 50% of this stock. It can go up 50% hypothetically if you were trying to trade at fair value, which it seems like for a while it was trading up here. So maybe worth it to look at it. Maybe I'll do a video on it. That might be the next one. But that's about all the ticker news for the day. I thought it was very interesting what happened. We'll look at some of our charts here. Green line is our balance, red line is our contributions, and this blue line right here that follows the green is if we invested in SPY or the S&P 500, where would we be? So that's about where we would be. We can see up and to the right. Want to continue that way. We're trying to stay a little more consistent with our contributions. We slowed down when we bought the house, but now we're trying to get back up to it, do 100 every single week, although it's a little tough right now. We're still doing that. Portfolio profit, we can see that we are at an all-time high of $9,140 profit. So first time crossing over that $9,000 mark. That feels great. We got the difference between if we invested in our current investments and the S&P 500 right now. We can see that we are outperforming the S&P 500 by $650, which may sound like nothing, but considering we've only been investing for a couple of years and really trying to outperform the market a couple of years, I say this is pretty good, especially when we're talking about compounded growth. I'll take $650 more invested right now any day. So that's that. We can look at our positions here. QQQM, VU, talked about that like 60-40 split we're kind of looking at here. We're trying to maintain that. Our balance here, contributions, there's a total profit. If you want to look not based on time weight, we are up 58%, 57.68% in the portfolio, but that doesn't take into account that, hey, we're continually investing, and that's kind of what's running a lot of this. And then something small I did want to point out is that we did take up a no contract in terms of Paramount taking over whatever streaming service was selling. So Netflix is basically seems like, I forget what streaming service is selling, but Netflix basically seems like they're going to win the contract more or less. Paramount seems like, hey, no, their bid was kind of publicly announced it being thrown out. So I just think it makes sense to, be invested in. So that's very good to see. So point being, hey, we're doing pretty good. Market might be slowing down a little bit. Overall market sentiment slowing down. Yeah, obviously. But it's been incredible years since, 2023, really. If you want to look at it, our stocks have just been flying up. Wouldn't be the worst if we slow down for a year, quite frankly, and let valuations adjust. Maybe the consumer be a little more revitalized also at the same time because they've been being pinched a lot. Inflation slowed down, revenue slowed down, everything slowed down a little bit. That wouldn't be the worst case for people to get on their feet. It's not all about just the gains I'm seeing in my portfolio, although that's great. I like to think about the macroeconomic situation too, because that directly affects me considering I now own a house. So thank you for watching the video. I hope you enjoyed it. Make sure to share with your friends, family, teachers, anybody. I love making these videos. If you have any suggestions, feel free to let me know. I will take them to heart and probably make a video on them because I love having ideas from you guys currently. So thank you for tuning in. Make sure to subscribe and watch next time. I'm sure middle of the month we'll be dropping videos. So see you later.